Hi everyone. Today I'm diving deep into the secrets behind O'Reilly Automotive's incredible success, and I'm challenging myself to uncover what really sets them apart in the auto parts industry. As you all know, this company is a leader in its specific sector, and I wanted to bring you this today because I wanted to talk about the performance. So let's look at actually year-to-date performance. Year-to-date performance is at 18.60%. That's incredible compared to the S&P 500, which is actually negative at the moment. And if we look at the 1 year, it has a amazing 39.77% return. If we look at the 5 year, 273.66%. And if we look at all time, it's a staggering 57,596 in 82. The point is that this company is excellent to buy for long term. It's owned quite heavily by institutional companies, and I'll dive into that in a little bit. The things to keep in mind here that I like to look at is where was the previous close. This is where we opened at, and something else to think about here is this PE ratio. We're sitting at 34.45%, which is not bad. And then they just reported earnings, and their next earnings will be right here on July 22nd through July 28th. They'll finalize dates then. So if we come down here to the very bottom, we can see actually who are their best competitors, and it's actually AutoZone, and AutoZone has actually underperformed what they have been in the past 5 years. We'll look at that in just a moment, and you can see Advanced Auto Parts and a couple of other companies which don't even come close to the amount of performance O'Reilly Auto Stock has been doing. So let's come down, continue to go to the bottom here, and we can look at revenue. Revenue has continued to go up. We can see every single time it has been going up. And what's nice to see about this is that they are continuing to buy shares back aggressively. The thing that I liked about this, even though they're missing on some of their actual estimates, is that their performance of their stock has continued to skyrocket. So let's jump over to Fidelity. I want to talk to you about this right now. All right, here we are on Fidelity, and I really like their website because it actually gives us a deep understanding of what this company does. It's very underrated. Fidelity, I would recommend it to do your research on here. I like to look at the price performance. We could look at the 5-day, 10-day, 1 month, 3 month, 1 year, and 10 year. We can see it's an incredible performing stock. I like to keep this for the long term, let's say in essentially a Roth IRA or even an individual taxable brokerage account. We can see the performance of this thing has been quite amazing over the past few years. 10 years, it's just crushed it compared to anything else. So let's go ahead and look at where we're going to compare this in the sense of competitors, right? I was talking about AutoZone. We're going to look at that right now, and we're going to look at O'Reilly. In the price performance, right? So in the 52 weeks, we can see that O'Reilly Auto Stock has performed a staggering 40% versus AutoZone at 26.68%. We can see Advanced Auto Parts has actually lost money at negative 54. Let me say that again, 0.85%. And then Amazon, which is only at 6.26%. What's interesting for me to see about this specific company is that nobody really talks about it in the world. I have looked for more information on this specific company, and it's bountiful amounts, but nobody really talks about it. That is why I am bringing this up to you today. So we can see where is the competition, right? So if we type in AutoZone here, we can look at where the price performance has been. This is their direct competitor. They are buying stock just as frequently as AutoZone is. One more thing to keep in mind, O'Reilly Auto Parts is likely going to do a stock split here in June. Go ahead and Google that and you can see that. It's depending on the shareholder approval. Performance over the past 52 weeks, O'Reilly has done 40 and AutoZone has done 26.68%. And we can see at, going back to the details here, their revenue is actually less than AutoZone, but they are performing better. The shares that are outstanding, and we can see the employees. So we can look at every single amount here of where this company is going, and it's very good. Let's talk about a couple of other things. Let's look at who actually owns this and why this is not talked about too much. What's really nice about Fidelity is we can see institutional ownership is at a staggering 54%. So you have to understand that the majority of this company is owned by giant institutions and not retail investors. That is what's so interesting about this. So we can look at their market cap. We're sitting at 80.40 billion, and in their industry, it seems, I would say fairly reasonable at 14.82 billion. Their price to earnings ratio, which is their PE, is at 34.49%. It's healthy, and their growth is continuing to go up. We can see over the past 5 years and where that is today. Gross margins are also looking healthy, and EBITDA is also good as well. We can look at their balance sheets for quarter one right here. here. You guys can go ahead and stop the video if you would like to go ahead and look at that. But overall, I would say the sentiment on this is very well. We can see where the technical statement is, it's strong, and then long-term it is neutral. We can see where these people are rating this specific stock, and we can see exactly where the fundamental analysis is in this. Unfortunately, the only thing that this thing does not pay is a dividend. That's the only downside to it, but we can see where their earnings has been. They have missed it slightly, but they are still continuing to do well, and this is their estimate coming up here on July 22nd, 2025. That may change, so keep that in mind. Now let's go back to the overview and talk about just a few more things. Overall, this is a 7.5. Basically what that is that they are bullish on it versus other companies. That's why I'm paying attention to it. And a couple of other things to keep in mind here is this is when their earnings are, and then this is where I was talking about that stock split right there. It's potentially going to happen. We'll see if it does or it doesn't, but this is a company that you want to hold on long term versus a company like AutoZone. I hope this video helped you guys out. Let me know if you have any more questions or want to talk about a specific stock. Leave it down in the comments below. And as always, thank you for supporting the channel, and I'll see you in the next one.